All right, what's going on, family? This is Paul McMillan II, and we're about to do another back testing session on NAS100. Now, this is a strategy that I learned from my cousin. He's in our trading group, and this is actually a strategy that you can utilize on any pair, anything you trade in the market. It's not just on NAS100. This is something that you can actually utilize on your favorite pair, whether it's Forex, indices, crypto, you name it. All right. So first thing we're going to do is the way we're going to do our top-down analysis, we're going to actually draw up market structure from the 15-minute to the 30-minute to the 1 hour to the 4 hour. And then we're going to, depending on which time frame we want to enter the market into, then we're going to determine where the market is going based on the market structure we drew up. Let me pause this recording and I'll be right back. Okay, I'm back, so we're going to go ahead and get started. So basically the way we implement this strategy is we like to actually go all the way to the past, what price did in the past. And basically we do it, and then we start marking up our market structure. So that way, by the time we get to the 30-minute to the 1 hour and the 4 hour, we have an idea of where current price is positioned as far as market structure and support and resistance. Then it's going to actually help us to make a better decision on what to do with current price as far as buying and selling. So the first thing we do is we take not a horizontal line, we take a vertical line and place it here. That way, once we start marking up the 30-minute to the 1 hour, we can see where we started. Okay, so that way we have an idea where price is at. So that's the first thing we start to do. All right, then we kind of zoom in, we look at market structure, and we start taking our horizontal lines and start marking up support and resistance. So typically the way I do it is I like to actually start wherever price is rejecting support or resistance. I start looking at wicks. Wicks is a strong indication that price is resisting or supporting. Okay, so I see a wick here, so we put one there. Then I see two wicks here. Okay, two wicks there. So I want to put a horizontal line there. All right. And then I see a lot of wicks at the bottom here. So I'm going to actually put one here. And then we're going to top it off and just put one at the top here, maybe a little bit off of these wicks here. Okay. So now we can clearly see how price is respecting these lines. And then what I do is I actually draw my zones off of these lines. So I have a color for each time frame. So we're going to make this gold. All right. And then we're going to actually change the coordinates of these so they can stretch throughout the whole screen. All right. So that's what we're going to do. All right. So now we got that in. So I've got all of that marked up. So then at this point, we pretty much have marked up all the support resistance. Actually, I could mark these up as well. Let's mark up this one. Then we're going to go to the 30-minute time frame. So we'll do this too as well. The reason why it's good to draw these zones is because when you're doing your top-down analysis, when you kind of look to the left of price in the past, you'll get an idea of exactly what price did on these zones. Because at one point or another, price is going to interact with these zones, you know, again and again and again. So let's go to the 30-minute. All right. So now we're going to actually go all the way back again. All right. And so now this is what we did on the 15-minute. And so now, as you can see, there's still some other support and resistance we can build on. Okay. So then what I'm going to do is zoom out, start building more support and resistance using the horizontal line. So I'm going to do this here. You can see how price respected this line as support here, which made price go all the way up to the next resistance. But then at the same time, price respected this zone as resistance here before it broke and went to the next resistance. So this is a good line. Then we're going to actually go to here, see some wicks here. So we can kind of, you know, utilize that a little bit. This is good. So then I'm going to actually start going to the bottom down here as well. Matter of fact, I'm just going to put another support here. Then we're going to draw a zone here. We're going to stretch this out. And I don't want to make these zones too cluttered. I'm just going to make them, we're just going to put them in the best place possible. Because the most important thing is just to identify support or resistance, because that's going to let you know which way price wants to go. You can never fully predict what price is going to do, but you can get an idea. If you can get an idea and be 70 to 80% accurate most of the time, then you're going to be fine. Let me see something here. Let me redraw the zone and make it thinner. That way it's not too close. There you go. That's kind of a little bit more reasonable. So when we zoom in, we can see what price is doing easily. Might make this a different color next time. Matter of fact, what I'm going to actually do, let me pause this recording. I'm going to do something different here. Okay. So I changed my zones to make it a little bit lighter so we can actually, so it's not too bright. So I'm going to go ahead, stretch this out. Then we're going to go ahead and put another one at the top here. You can clearly see a wick up here. Got the zones that way. So we're going to do it that way. So now that we have all these zones drawn up on the 30-minute, now we're going to go to the 1 hour. So now when we look at the 1 hour, we can see all the zones we marked up all the way up until this point. So then I'm just going to basically focus all the way up here until we get to current price. And this is current price right here. Okay. So then we're going to actually zoom in. All right. We're going to zoom in. So we're going to put one here, wicks here. Okay. Then I see another one here. I see a whole bunch of wicks here. Actually, I see a couple here. We could just match it all the way up to there. And then I see another one. Matter of fact, we could probably go down to here. You know what? Yeah. Go down to here. Then we can put the next one. We can put the next one up here. And then we'll have another one all the way up to here. All right. And again, these zones don't have to be drawn perfectly. You just need to make sure that market structure is drawn properly. So that way you can identify what price is doing on these zones. That's going to give you the sniper entries. All right. That's what we want to do here. Stretch all these out. Right. So now we got all this marked up. So now we actually have an idea, well, almost. So we have an idea of what current price is doing even down here, because now it's touching this next zone. And at this point is oversold. So we have an idea already what price is probably going to do. So let's go ahead and we'll go ahead and just hit the 4 hour. Then on the 4 hour, since we're zoomed out, we can easily mark up here, okay? You see prices interaction, you see a wick here. So this is a good one. Then we're gonna go all the way to the top here. The price was clearly rejecting all of that. Now, usually I change the color of my zones on each time frame, but I'm just going to just kind of speed this up. Not speed it up, but just kind of make it simple for this. So I got that marked up. Let me pause this recording. I'll be right back. All right, so I'm back. So now we have everything marked up from the hour to the 4 hour. And so we kind of have an idea of exactly how prices interacting with these zones. So really in reality, if I want to enter in on the 4 hour, I probably would erase this zone here because it's a little too cluttered. But that's if I was going to trade, if I was going to get my sniper entries on the 4 hour. But I'm a scalper, so I like to do it on the 15 minutes. Let's go back to the 15-minute now. All right. So now we have an idea of exactly how current price is even interacting with these zones. So let's analyze this. So, and the first thing I'm going to actually do is, we're going to analyze the overall market. So the overall market at this point was actually trending downward. Okay. You see a whole bunch of pullbacks, price action resisting this zone, which we drew, resist that zone again, and then made price drop. Then it resisted at another zone, drops, respected this zone as support, but then drops, and then clearly retested this zone and dropped again, and then did the same thing. Okay, so it's safe to say that price was actually trending downward at this point. So I could draw a trend line here, say, hey, price was trending down. Now, and the question I would have in my mind is, how much further will price drop before it's going to start to reverse? Because when we look at the RSI here, price is pretty much very close to being oversold. So reversal is imminent. So then at this point, I will look and see if price hit the next support. So at this point, I probably could pull this support line down. And I can erase this horizontal red. So I could realistically pull this support straight down to here. And at this point, this is going to be the support like it is on the RSI at the bottom here. So this is the next zone right here. Now that's why I moved it. So then what I would actually do is, I see price is still trending down. So then the question is, at this next zone here, and I could have drawn the zone, but I decided to pull it from up here. So at this next zone here, is price going to continue to break through, retest, and continue to sell to the next zone? Or is it going to respect this support zone, reverse, and start to shoot up? And then break and then retest up. And that's what we would have to wait for, okay? But this is why we actually mark up our zones this way, because now we can actually see where current price is regarding support and resistance in zones. Then that's going to help us to make a better decision to figure out, is price going to continue past that zone, retest, and go to continue the same direction, or is it going to respect whatever zone it's going against and do a reversal in the market and give us a sniper entry? All right. So now what I would actually do is, at this point, this is what I would do. So now it's actually time for me to turn on my indicators. And notice here, now this is the high and low strategy indicator that I use. Now, notice when we zoom in, right? Notice I drew this support correctly because there is a support line right above the zone that I drew. So then I was correct. We want to see if price is going to break through this lower low, right? And break through this lower low, retest, and continue to sell. Same thing with this zone. Or is it going to respect this lower low as support and reverse and start to shoot up and go bullish? Okay. So now we know that price is overall bearish at this point, but it might be at the end of this ring. I mean, at the end of this run. So then I already have a support here. So then I will go ahead and take my horizontal lines at this point. And I would actually mark this up here. And I would actually be looking to buy if price decides to push up, retest this line, and go up, especially if it passes this trend line. I'm going to change my trend line to bring it closer, at least to like maybe here. And then I'll be waiting for price to cross this horizontal line and trend line. So then I would set an alert. Alert's not available on back testing, but I would set alert and wait for price to close above. And then when it does, then that's when I will go in for the buy. Now, so then I would just wait and see what price would do. So what we're going to do is we're going to do the replay tool, and we're going to play one by one, and we're going to analyze this. So now we see that price is kind of pushing against this zone, but we see a very huge wick here. Okay, wick against that. That's a sign that price is resisting that zone, even though it's kind of passing this lower low, but it's resisting the zone. Let's see what happens next. Now it's starting to push up, and when you look at the RSI here, you see that price is actually starting to reverse and push up. So that's a huge indication that price is ready to change direction. So at this point, we're not focused on selling. No more selling at this point. So now let's see what price will do next. The price is trying to pull back and sell again, but then it's starting to retest and push back up. Now price is trying to push against this zone. Then it pushed against the zone again. So now at this point, I would move my zone down and say, okay, so price is pushing past it. No, this is what I would actually do. I would see price pass this zone, but I would have to see a retest, a close, I would have to see the next candle close below this, and then continue to go down in order to sell again. So let's see what price does after that. So now you kind of see, now this wood looks like that price is closing below, but you see this wick. So actually price is still resisting that zone. So I will move this zone down. Well, matter of fact, we have another zone here. So then let's see what price does again. So it looks like price is trying to sell down. So it would be tempting to sell, but we see a doji here. That's why when you are trying to get sniper entries in the market, you want to keep an eye on your on your candlesticks. So I'm actually going to delete this zone. I'm just going to use this for now. So you want to really keep an eye on your candlesticks. All right. We see that there was a candle here, kind of was a bigger doji, and there's two wicks on the top and bottom, which gives you an indication that the bears are actually getting exhausted. Now you see a blue doji. Now there's indecision in the market. You definitely do not want to do anything at that point. Sit on your hands and wait. Now, let's see what price does. So now the bears are still trying to fight, but now it's starting to resist this zone here. Okay. Now it's starting to push up again. Now it's really starting to push up. Okay. Now at this point, I probably would go ahead and probably prepare to buy. So then I'll probably move my horizontal line down here and my trend line here. And then really at this point, I probably would just adjust my trend line and just draw it here, to be honest. Because price is already reversing. We can see that. We can see that on the RSI. So then at this point, I would actually bring out my risk to reward tool and start is what I'm looking for. I would actually bring out my risk to reward tool here and start preparing to buy. Okay. So then I put my stop loss here at this support here. Put my entry off of this horizontal line. Then I want to get at least a risk to reward of 1 on this. Let me pause this recording real quick. Okay, I'm back. So now that I actually now that I set my risk to reward tool, then I will figure out how many pips this will probably be. So this might be close to 100 pips in NAS, possibly. Could be wrong. So I would just label this as maybe 20 pips in NAS, or really 100 pips in NAS. But we'll just say 20 pips if it was Forex and any other asset. Then I will raise it to the next one to go even higher. This would be like pips in Forex and then maybe more. So I mean, maybe, I don't know, close to 100 pips. I hear if you get 10 pips in NAS, that's like 100 pips in NAS. So if we're doing it all the way up to here, that's a lot of pips. So we'll put it that way. So then we're going to put a stop loss here. So then at this point, when price is starting to approach this line, I will wait for it to close above. So then the very next thing that I would do is I will go ahead and start inputting the stop loss and take profit in my phone. So I'm going to show you guys exactly how I'm doing that. So let me go ahead and share my phone screen. All right. So then what I would do is I would choose NAS100. So let me find that. Put the chart, the trade it. So then I'll be going in for a buy. Now keep in mind when you're trading NAS, you want to do 0.20 for your lot size. That's $2 per pip. That's going to help you to, gain a lot of pips and NAS and make, a good decent income in a trade without getting close to blowing your account. So always keep that in mind when it comes to indices. Set your lot size to 0.20 or less because NAS is extremely volatile. So the stop loss is 149, 14997.9. Take profit is going to be 151. 21.9. Okay. Then what I would do is I would actually leave that there. And then when price starts to buy up and close above and I get that alert, then I'm pushing the buy button, okay? So now we're going to go back to the chart. All right, so we implemented everything. Now let's play with the replay tool and see what price decides to do. So now price is kind of pulling back a little bit. So this may be a small pullback. So I will pull out my Fibonacci, most recent low to the most recent high. And it looks like price is pulling, rejecting the 2360. So that kind of lets me know that price is probably ready to go back up again. That's not a huge pullback. Price didn't even pull back to the 50%, just went straight up. So knowing that, I would erase this fib. See what price does. Now it's rejecting this line. So if I pull out the fib, I'm going to do something here. I'll just do this as a note. In this line here, I'll just take a zone and just put it there. Make it red. So price is respecting that zone. Then I'm just going to basically erase this fib. Okay. Now, see a price. It looks like, see that wick, doji, indecision in the market, and is respecting this level, this fib level. So then looks like there's another doji rejecting that line, and now it looks like it's starting to push up. Pushing up, pushing down, looks like pushing down, down. It's a lot of consolidation at that point. So we're definitely not going to do anything yet. And it's rejecting this level here again. Okay. Now it looks like it's starting to push up a little bit. Now I see this here. So then the question is the next candle going to close above this? There we go. So now you see it here. The next candle closed above here. So once this next candle closed above and I got this alert and start to push up, then I would be putting in my buy. So I'm going to show you that in the phone. So notice I still have my stop loss and take profit pasted in, right? Then I would just hit the buy market, bam, okay? And then I would be instantly in that trade. Now let's see how that trade played out. So now, I mentioned before, we entered in here after the candle closed above. And then let's see where price go. The price will pull back a little bit, even though I would have gained some traction off of this engulfing candle. Now price is really pushing up and I'm almost hitting my first take profit. Now it's really pulling back. So at this point, I probably would have closed my first partial trade here since I'd be close to hitting my first profit. I probably would have been at $200 profit, maybe 250. So that's a good profit. I already made my profit for the day. The price is pulling back and respecting this next zone up here. So then price will be pulling back more, and then now it's pulling back more. So I would have definitely closed my first trade, but then now price is pushing up again. So I probably would have let my second trade go to see if I can get some more money on the second trade. Now it's pushing up. Doji, 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 and then guess what? Totally smashed the first take profit there. Let's see if price goes any further. Pulling back, pulling back. My second partial trade probably would have been closed by now, but then price went up again. So if I had kept my second partial trade, I probably would have made more. Pushing up. Let me pull this down so we can see it. Now let's see if it goes to our second take profit. I'm just curious. Let's see, now it's kind of pulling down. Now, at this point, I would have entered out the trade because price could hit this next take profit, but there's a resistance here, and we could drag this zone down to resistance here. And price is respecting it, which is why this Baker's candle formed. So I definitely would have closed my second partial trade out of this. But there was some consolidation, and it gave us clear indication that price was about to shift over. There was a doji here, and then all of a sudden there was a Baker's candle, which we could have got some pips out of that. And then here's another one. So that's why market structure is important, because we drew this earlier, right? We wouldn't have known that price was going to shift over had we not drawn the zone. So that's why we draw the zones the way we do in this strategy. So now, but then of course, price is rejected and it looks like it's going back up some more. But looks like price is respecting it, maybe. Oh, but then price is actually pushing up. Okay, then. That's good. Then price pushed up. So, you know, it's still good we drew the zone, because price was respecting it. We could have got a couple of sells, but we would have been out of this trade. But then we could have got another entry here if we wanted to, because price is shortly pushing up. So price bought up. But the funny thing about it is, when you really look at this, you look at the RSI, price is really respecting this. So price really still respected this zone, because it didn't really close above. It really faked out, and then it started pushing down. The price might push up a little bit more, but it's actually going to respect this. So earlier, I actually had this pushed up a little bit more. So it really is respecting this zone. And now look at a Banker's candle. Rejected the top again. Another Banker's candle, another sell opportunity. Look at the RSI price of selling. You see why these zones are important when we draw? Bam. Look at that. Bam. So that could have jumped out. Bam. 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 See that? It's going back and forth. So this is why we actually do this strategy. I hope this strategy made sense. But that's why we mark it up the way we mark it up, because then it's going to give us better decisions in the market based off of these zones. And the crazy thing about it is I didn't even implement any of my indicators. I normally do, but I wanted to do this just to see how this market structure is going to help. But these indicators would have already helped us with the sniper entry as well. So perfect example, you see how I actually enter the market, I want to say right here. Okay, and this is where, no, I take that back. I entered the market here. Let me erase this risk to reward tool. So I entered the market right here, okay? And notice my indicator followed up. Mustard was over catch up, then over catch up at this point, and then it crossed over water. And that's what gave us the sniper entry here, and then ultimately went up. And so that's how this indicator works. It's a foreign XLG EMA setup indicator. Basically, when mustard crosses over catch up, which is the red EMA, and it crosses over water, which is the light blue EMA, that gives you a sniper entry. All right. And then you can kind of even see it here. I'll show you another one. You can kind of see it here. Erase these circles. You can kind of see it here as well, to where, remember when price dropped heavily here, this would have been some good money and indices, especially. The mustard crossed over, catch up already, and water gave you another sniper entry. So if I had implemented my indicators, I definitely would have had a good sniper entry, but it shows that my indicators work well with this strategy. But that's how we actually work this strategy with market structure. Yeah, you see how I drew this zone earlier, right? And price is still rejecting it. You notice it went up, rejected it more, sold, but then it pulled back, rejected it more. You see two more Baker's candles. Crazy, right? See something else. And price went down and sold again. Okay. Went up, trying to pull back, respecting the same zone that we drew. Look at that. Bam. Bam. Lower high. Resistance. Bam. Sold down. And then it made price just go all the way down to the next zone. And the crazy thing about it is, if I had drew another zone here, I'm going to show you guys something as well. Let's say I had drew another zone right here, okay? Which I could have. You notice that price came up and respected this zone, which made price go all the way up to this ultimate supply zone and resist. And you notice price came down and respected that zone again, like it did here, and it pushed price up again. But then eventually when price respected this, it came down to the zone and respected it, but then it finally broke it. And so what if I drew another zone? I want to show something real quick and then we're going to be done with this session. So I see another zone that I can draw here, okay? Another example. Let's see if price comes down to this zone that price came up on before, broke through and then went all the way up. Let's see if it comes down to it. I'm just curious. Pushed up. Or I can respect it at top zone. I just want to see if it's eventually going to come down to it. I'm just curious. It might not. Well, eventually it probably will. Still respecting this zone though. Yep, so price is buying up and respecting all that. And it's going up. But I wonder if it's eventually going to come back down to this zone here. I'm just real curious. It's probably going to take a while for it to come down to the zone, but eventually it would. I guarantee it probably would. Let me stretch this out so we can actually kind of see it. Let's see if it actually does. It'll probably take a while. It's probably going to go up for a while, and then eventually when price start trending down and pushing down, it's going to probably come back to the zone. But either way, price came back to this same zone that we drew here, respected it and came down to it, and then kind of broke it, but then came back up. So it was really a fake out. But you see why zones are important and why it's important to draw the way we do it. So, but that's it, guys. That's the end of this back testing session. I hope everything made sense. I'm going to post this in the Facebook group. And then I'm going to post this on YouTube on my page so you guys can study this. And then we'll see if this strategy works for you guys. And if it does, then bam, we're making progress. All right, guys, take care. Bye.